Today I want to talk about the single biggest reason that prevents Bitcoin from hitting highs of $1 million per coin or higher, and how conversely this stumbling block preventing Bitcoin from doing that is eventually going to turn into a ramp to let Bitcoin do that, and when that's likely to occur. But before we get into that, we have to address the concerning ongoings in the market. Certainly not the nicest of introductions to Bitcoin for El Salvadorans, and that's putting it mildly. Frankly, it's a bit embarrassing for some, having potentially one of the worst possible starts to a country adopting Bitcoin isn't exactly a great look. I suppose a small positive is at least they will have first-hand experience early of how volatile Bitcoin can be, and especially important how it always eventually recovers. But yeah, not gonna lie, it kind of sucks. However, I personally am quite confident of a recovery, but let me show you why. Because my job, as I see it, is to give you some memes, of course, I always enjoy that, but also to not give you baseless opinions without presenting you the facts as to why I believe certain things. Your job is to do whatever you want with it. So Bitcoin had the largest liquidation event since May. I'm still bummed out that this happened. As usual, with every crash, someone is blamed. There's no doubt a ton of conspiracy theories about the International Monetary Fund themselves dumping Bitcoin because they're angry at El Salvador. But that's just, it always has to be someone, and it's completely baseless. Let's be real. Here's what we do know happened. The price wandered downward to a popular stop-loss level, a level where people will have their Bitcoin automatically sold to lock in their gains. Tons of people had their stop losses at exactly $50,000 because it's a nice round number. So when we hit 49,999, a cascading amount of sells hit the market, bringing everything down rapidly. Not the only reason, but that's why what may or may not have started as a coordinated selling effort definitely ended in a community-driven dump, estimated to be somewhere around 376,000 trading accounts, all getting liquidated for a total of $1.4 billion. Any exchanges going down during this likely went down due to the surge in web traffic rather than intentional manipulation. I don't think that argument really makes sense, as in fact them going down may have even prevented Bitcoin from falling further. So why am I confident in a recovery? According to recent data from Glassnode, the amount of holders of Bitcoin only continues to climb at one of the fastest paces we have ever seen, which is definitely at complete odds to the recent price action. This is what I would call bullish divergence of a massive scale, where price isn't aligning to what's happening, and this can only continue for so long before they align once more. Like gravity. Currently, it's just unnatural. But of course, this is a long-term trend and doesn't mean the price is going to shoot up only before the end of the week, although I wouldn't be surprised if it did. I would just see a recovery as an eventual inevitability, as the trend is definitely your friend. But should that suddenly stop and there be more short-term downward price action, the $40,000 to $37,000 region has a confluence of previously established support and would very likely be a key area. But if that happens while the amount of holders continues to climb at this pace, that bullish divergence just continuing to grow, I think it would represent an absolute gift of a buying opportunity. That is my personal opinion, actually. Take that for what you will. But if you're tired of living like an average upper middle class citizen and you want to be experiencing that upper class lifestyle that you know Bitcoin is capable of helping you achieve, and are wondering why we're not there yet already, well, there's really one major thing that's stopping that from happening.
Fly, you fools!
Assuming you aren't there already, of course. So in the last video, we looked at whale behavior and how it's similar to what brought Bitcoin to new all-time highs previously, namely major wallets accumulating even more Bitcoin rather than offloading it, absolutely essential to price appreciation. Who exactly these wallets all belong to, we can never know exactly, but some were definitely MicroStrategy, and recently it's been announced that ARK Invest was another, now holding $338 million worth. So where exactly is the problem here? Well, it's because sadly, while this activity is good, it's fairly minute in the grand scheme of things. The top 1% or the super rich, according to a report published at the end of 2019, have run out of investing ideas. So they've parked 4.7 trillion in the bank. 4.7 trillion sounds like a lot. It is. Bitcoin's market cap isn't even one yet. But here's the crazy thing. This is just in America and just in cash. If we're talking net worths, we haven't even scratched the surface. The net worth of the top 1% of US households accounts for $41.5 trillion. But if the super rich have trillions sitting in the bank, what is stopping them from putting at least some of it into Bitcoin? Some financial institutions have started, but here's one of the biggest problems. ARK Invest came under fire recently for their heavy Bitcoin bias. This is after their CEO, Cathie Wood, has a proven track record of success investing in emergent tech. Surely she's above reproach at this point. Certainly so is Bitcoin at tens of thousands of dollars per? No, not at all actually. Legendary investor John Paulson, who made billions shorting the subprime mortgage market in 2007, criticized them, saying this: "No, I'm not a believer in cryptocurrencies, in that I would say that cryptocurrencies are a bubble, and I would describe cryptocurrencies as a limited supply of nothing. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount." I think the most dangerous thing about this statement is that there are some elements of truth, making the whole statement quite believable. But it is absolutely riddled with privilege. I literally just need to show you a picture of a Zimbabwe $1 trillion note. Not worth the paper it's printed on to know why. Or giving banking services to millions of unbanked people worldwide. But yeah, that's not important. Bitcoin's completely useless to everyone. Okay. Here's what I think is a crux of the issue. Sunk cost fallacy. I could maybe use some other terms, but this can wrap it up somewhat neatly. For example, Cathie illustrated this by responding to his criticisms. John Paulson he made an incredible call during the mortgage crisis. He has been a gold bug, I would say, for the most of his career. And many investors who have spent their careers focused on gold cannot understand the digital concept associated with gold. And therein lies the problem. Even if you could educate someone, effectively teach an old dog new tricks, it is very difficult for someone who's been invested in gold their whole lives to admit that this past decade they were wrong. That digital gold is not only an alternative, but a superior one to boot. That's a very bitter pill to swallow. Let me put it like this. You ever had a friend who you told Bitcoin about years ago and sort of brushed you off, didn't really agree, or worse, argued? Maybe they thought you were stupid? Imagine how it is for them now to buy, knowing you got it cheaper. They would firstly be admitting they were wrong, admitting that the world they knew has changed, admitting that their knowledge is now less useful, and taking a financial hit for it to top it all off. From what I've seen personally, most of these people would rather Bitcoin crash to nothing and have tons of people suffer as a result than to admit that they were wrong. I'm not kidding. They are very selfish about it. Sunken cost fallacy essentially is extremely common among these individuals as a coping mechanism. You'd think they'd eventually crumble as Bitcoin skyrockets, but quite the opposite. The more it goes up, the more they defend themselves. Let's take Bill Gates' recent comments as one such example, who also, by the way, sold millions of Apple shares in the early 2000s, missing out on upwards of $100 billion today, and who also bought out Nokia. Maybe a good businessman, but hit and miss with investment advice. These people will likely never admit that they were wrong, even if Bitcoin goes to over 100,000 per and it stares at them in the face. So what is the solution? How does this eventually get solved? I honestly think we might need to wait for boomers to die. I don't mean to be so bleak, but here's what I mean. Millennials are on track to become the richest generation after the current richest, baby boomers, pass on their inheritances. When is that going to happen? Roughly 2030. That is when the biggest wealth transfer in history will be occurring, where this new generation, who are far less likely to have this stubborn approach regarding digital assets, will come into all this money. You don't have to take my word for it. According to a study done this year by USA Today, 25% of millennials in America already own cryptocurrencies. That is an insane statistic if true. I doubt it's actually that high, but it is no doubt higher than the amount of them that own gold. If these exact people who will inherit multiple trillions, and many already know it's good to have some exposure to crypto, much better than leaving it in the bank at least, you put two and two together, Bitcoin hits 1 million, having a market cap of 21 trillion, also double the current market cap of gold. which will lose popularity as this transfer of wealth occurs. This prediction also neatly concurs with the most popular Bitcoin projections that use past history to extrapolate its trajectory. And that is why I will never sell all of my Bitcoin, because I'm terrified of being an idiot. But hey, that's just a theory, a moon boy theory. Thanks for watching.